Running a veterinary practice takes heart, hustle, and a whole lot of stamina. But navigating the tax side, that's where a lot of DVMs get overwhelmed. If you're trying to do everything yourself and wondering if there's a smarter way to keep more of what you earn, you're in the right place. I'm Cassie Sykes, enrolled agent and founder of Greener Pastures Income Tax. Every week, I go live to break down the financial side of veterinary practice ownership so you can make informed decisions without getting buried in tax code or second guessing what's allowed. Today, we're talking about a strategy that gets a lot of buzz, but rarely gets explained properly: hiring your children in your business. Yes, it can unlock legitimate tax savings, but only if you understand how it actually works. Why do I teach this for free? Because when vet practices are financially strong, everyone benefits. You, the owner, your team, and the animals you care for. And honestly, these weekly lives keep me connected to this community, to real world questions, and to the bigger mission behind the numbers. Each live session is packed with practical tools you can use right away to improve profitability, reduce tax headaches, and take more control of your financial future. If you know another DVM who could benefit from this, tag them or share this video. And if you're catching the replay, drop your questions in the comments. I always check back and respond. Before we dive into the content, I've got something extra for those of you who want to take this a step further. If you book a free call with me after this live, I'll send you a one-page worksheet that outlines how to properly document your child's work, what to pay them, and how to track it for tax compliance. It's the piece most people skip, and it's where the IRS will look first if you ever get questioned. If you already know you want that worksheet, head to the link, the booking link in the comments, and grab a time on my calendar. Let's dig in. Give me 1 second. Let me get my slide shared. Sorry. So, hiring your children in your business is one of the most talked about tax strategies for small business owners and one of the most misunderstood. When done correctly, it can lower your overall tax bill. It can create earned income for your child and keep money flowing within your household instead of sending more to the IRS. But, and this is important, it only works if it's done right. This isn't about cutting corners or making your kid a fake employee to claim a deduction. It's about legitimate, documented work paid at a reasonable rate with the right structure in place to back it up. Today, I'm going to walk you through how to do this properly, what the tax savings actually looks like, and how to avoid the mistakes that get small business owners into trouble. Whether your child is 8 or 18, there are smart ways to make this work, and I'll show you how. If we haven't yet met, I'm Cassie Sykes, an enrolled agent and the founder of Greener Pastures Income Tax. I work mostly with veterinary professionals and practice owners who want to build more profitable, sustainable businesses without drowning in tax rules or financial guesswork. With over 25 years in the field, I've seen what happens when small business owners are left to figure it all out on their own, and I've built my firm to offer something better: real support, clear strategy, and a little dry, sarcastic humor along the way. I personally live in East Texas with my husband and 2 teenagers. And yes, when I'm not buried in tax code, I'm skating laps on a roller derby track. My derby name, Can't Tax This. It's a nod to April 15th, of course. So let's keep going. I'll break down exactly what qualifies as legitimate work, how much you can pay your kids, and the compliance steps that make or break this strategy. So just to be clear from the start, this is 100% legal, 100% allowed by the IRS, and very clearly outlined in the tax code. This is not a loophole. This isn't about trying to cheat the system. In fact, when you do this properly, the IRS doesn't bat an eye. They've already approved it. But like everything else, when it comes to taxes, you have to do it correctly. You can't just cut your child a check and call it payroll. There are guidelines, there are documentation requirements, and there's some nuance depending on your business structure. And we'll go over all of that today. But the benefit is real. It's something I see my clients use again and again. And when it's set up correctly, it's an incredible strategy. So let's start with the big picture. As a business owner, you're allowed to pay your employees for work. That's a deductible business expense. Now, if your child does real, necessary, age-appropriate work in your business, they can be one of those employees. You get to deduct the wages you pay them, and they get to receive that money up to a certain limit, completely federal tax free. In 2025, that number is 15,000. So if you pay your child that amount and everything is done properly, you've just reduced your taxable income by 15,000, and your child walks away with that money in their pocket without owing a single dollar in federal income tax. Why? Because of the standard deduction. That 15,000 is the current threshold where an individual can earn income without having to pay federal taxes. As with a lot of things with the government, it changes often. The standard deduction changes every year. So if your child is your employee and they're under that limit, you've just shifted that income off of your tax return, and into their 0% tax bracket. That's the real savings, and it adds up fast, especially if you have more than one child who's eligible. The best part is this isn't just a tax saving strategy. This is a family wealth strategy, because chances are you're already spending money on your kids. You're paying for sports, clothes, phones, camps, extracurriculars, meals, and school events. And you're doing it with your after-tax dollars. But if your business pays your child and your child then uses that money to pay for those same things, you've just shifted that expense from non-deductible to deductible. Same money, very different tax treatment. Now, I know what you're probably thinking, Cassie, this sounds great in theory, but what's the catch? What do I actually have to do to make this legit? So let's walk through it. First off, your child must be doing real work. That means it has to be necessary for your business. It has to be something you would reasonably pay someone to do, and it has to be appropriate for their age. So no, your toddler cannot be your receptionist, but your 10-year-old might be able to help clean exam tables, prep laundry, organize files, or restock supplies. Your 14-year-old might be helping with client follow-up emails, making graphics for your clinic's Instagram, or even checking that day's appointment list and preparing basic welcome packets. If you're mobile, they might be helping you check and pack equipment, organize samples, or assist with admin tasks at home. The possibilities are endless, as long as the work is legitimate. I always ask clients to imagine replacing their child with a stranger. If you'd feel comfortable paying that stranger for the same work, then it's probably a legitimate task. Next, you need to document it. That means tracking the hours your child works, describing the tasks they completed, and setting a reasonable pay rate. This is one of the most common areas where people get tripped up. You can't just say, oh, I paid my kid $12,000 this year and hope that holds up. You also can't pay your 10-year-old $40 an hour unless you would be paying that $40 an hour to a stranger. So it's got to be reasonable. If you ever get audited, you're going to need to prove that they actually worked those hours, that they were paid consistently, and that the pay was fair based on what they did. Now let's talk about how you pay them. This can't be cash under the table. You need to pay them like an employee. That usually means check or direct deposit, something that leaves a paper trail. The money should go into a bank account that they have access to, ideally one set up in their name. From there, they can use the money how they see fit with your guidance. You could also use that income to help them contribute to a Roth IRA, say for college, or start budgeting and learning how to manage money. All great life skills that schools are definitely not teaching them. The next big question is about business structure. If you're a sole proprietor or a single member LLC that is not elected to be taxed as an S Corp, and your child is under the age of 18, here's the magic. You do not have to withhold or pay Social Security or Medicare taxes. That's a huge win. You still get to deduct the full wage. Your child doesn't owe any federal tax on it, and neither of you owe payroll tax. That's about as good as it gets from a tax saving standpoint. If you're taxed as an S Corp, or if you're in a partnership where your child isn't a partner, then you will have to run payroll through a traditional payroll system. You'll have to withhold Social Security and Medicare, issue a W-2 at the end of the year, and follow all the same steps you would for any other employee. It's a little more involved, but it's still absolutely worth it. You just need a plan and a system in place. What I don't recommend is trying to slap this together at the end of the year. You can do it, but it's harder and it's a more do it right now, not do it when you feel like it type of thing. So if you're watching this in July or August and thinking, oh, I'll just pay them a lump sum in December to get the write-off, don't. That's not how this works. If there are no records, no time logs, no real tasks being done throughout the year, and you're just trying to write them a check to reduce your tax bill, that's not going to hold up under scrutiny. The IRS has clear guidelines and they expect consistency. This is one of those start now strategies, not a fix it later strategy. Another point I want to make is this. Employing your kids isn't just a financial decision, it's a parenting decision. It gives them real world experience. Excuse me. It helps them understand the value of earning money. It introduces them to budgeting, taxes, savings, investing, and delayed gratification. And when they see you modeling good financial decisions, they're more likely to build those same habits themselves. So let's recap the big picture. You're allowed to pay your children to work in your business. If the work is legitimate, the pay is reasonable, and everything is documented, you can deduct those wages just like any other employee expense. Your child can earn up to $15,000 in 2025 without paying any federal income tax. And if you're set up as sole prop or single member LLC and they're under 18, you don't have to pay any payroll tax either. That's money staying in your household, helping your family, and building your child's future. If you've never heard this before and you're wondering why your CPA or accountant hasn't brought it up, you're not alone. Sometimes this strategy doesn't make financial sense, especially for very small operations, those that are new, those that are running at a loss, etc. A lot of tax pros either aren't comfortable with the strategy, don't fully understand the rules, or just don't take the time to explain it. That's really unfortunate because this is one of those strategies that can significantly reduce your overall tax liability, shift income within your household, and make your dollars go further. If you want to talk about how to do this in your own practice or business, whether you're already having your child help out or you're just now realizing the potential, I'd love to walk you through it. I can help you figure out whether it works for your business structure, how to start cleanly, and what steps you need to take to get compliant. You can book a free call using the link in the comments or message me directly. If you've already been doing this, but you're not sure it's structured correctly, we can also take a look and clean it up before year end so you don't lose that deduction, or worse, trigger an audit down the road. Now, if you're thinking, okay, this sounds great, but how do I actually do it the right way? I've got something that can help. If you book a free call with me, I'll send you a one-page worksheet that walks you through exactly how to document your child's work, figure out a reasonable wage, and stay in compliance step by step. Most people miss this part, and that's where the IRS cares about most. You can grab that free call at the link in the comments, and I'll make sure you get the worksheet once we talk. If you're running a busy veterinary practice and you know there are leaks in your system, whether it's pet insurance, accounts receivable follow-up, collections, or just messy books, we should talk. I offer a free profit and cash flow analysis call where we walk through what's working, what's not, and where money might be falling through the cracks. No pressure, no pushy sales, just a smart conversation about how to improve your numbers. Again, you can grab a time in the link in the comments. Your practice doesn't have to be perfect, but if you're ready to start running it with more clarity, control, and confidence, this is a great place to start. Before you go, I want to share an incredible resource designed to elevate your veterinary practice's financial successes. I put together a free ebook just for you. It's called 7 Financial Strategies for Veterinary Practice Owners. Inside, you'll discover practical steps to increase your profitability, improve cash flow, and make smarter financial decisions for your practice. You can grab your free copy in the comments. Thank you so much for tuning in today. If you found this helpful, like this video, share it with other veterinarians. If this is something you want to implement in your own practice, don't forget to book your free call and I'll send you the worksheet to help you do it right. And I'll see you next week when we talk about how to track multiple revenue streams in your veterinary clinic. Have a great day.